All right, everybody. Good evening, everybody. If you are in class and you can see my face and hear my voice, I'd like to just type one in the comment section. Just type one in the comment section. You can see my face, you can hear my voice. I'd like to just see one in the comment section. Okay. Oh. All right, if you can see my face and hear my voice, just type one in the comment section. I'm always excited. Every time we come, we go a step further. And there's a reason why the class is taking uh, many days. The reason is to systematically share the knowledge with you and not to rush anything, okay, as pertaining the syllabus. I just wanted to internalize it so that before we teach another thing, you'll have been engaged, in testing, studying, understanding the previous lesson, so that at the end of the class, you are almost a professional trader, almost. All you need to do is to back test, and you actually go through this training. I promise you, after 2 weeks of back testing, you can literally begin to trade. Normally, I don't say that. I tell people to stay 2 months, 3 months back testing before they start trading live accounts. But with this systematic, if you have actually been following, you discover that if you have been practicing what we have been saying, you would have mastered certain things. If you are genuinely following the lessons, if you are genuinely following the training, you would have mastered the training. You must have mastered the skills, and then coming to live account live trading after 2 weeks of training. It's possible. It's possible just by following instruction. Because you see, towards the end of last year, I started having a little modification in our vision in training and empowering people on how to do financial market. And the vision is that the syllabus should encompass everything, so much so that if you don't know anything else aside what you are taught in an Apicts Forex training, you are good to go. You know sufficiently enough without giving you any book, without giving you any other video, without you knowing anything else. You are good to go. And I like you to also understand that the forex training is not. There are so many entry strategies in the market. Okay, and you don't have to know everything. This is one of those skills where you don't have to know everything. Just know something that you have mastered. Again, somebody say, I prefer you master a strategy 1,000 times than you to have 1,000 strategies. It's better to have a strategy which you have mastered 1,000 times than to have 1,000 strategies. Okay, so if you have something very simple, you see this one at the end of this class, and when you begin to dot all the I's and cross all the T's, you discover that having an entry in the market, an exit in the market, an edge in the market is not as complex as you may think. It is damn simple. Okay, it's damn simple. Okay, so let me. So we started talking about how to trade trending market. You need to understand that the everything we've been doing for the past few classes is been how to trade trending markets, how to trade trending market. And I told you that how to trade trending market. Okay, I told you before that there are basically three tradable markets, or two especially. the trending market, and the ranging market, the uptrend market, and then the downtrend market. And then we have the ranging market. You have it when the market is ranging, when the market is between fixed resistance and fixed support, and then you are supposed to buy at a support and sell at resistance. But then when the market is in a trend, the strategy to trade it is different. And that is what we've been considering. We've been considering how do you trade a trending market? What are the strategies you should use to trade a trending market? When market is trending like this, making higher highs and higher lows, higher highs and higher lows, and in the bullish trend, the same thing for lower highs and lower low, lower highs and lower low. They are both trending market, uptrend, downtrend. And the strategy to use to trade them is what we have been discussing. We're talking about, and just like what I said in this place, this is actually what we're talking about: how to trade trending market. How to trade trending market. You have the EMA, which you have discussed. EMA. We have the ADX. We did ADX yesterday, and then it was mind blowing. I see these two strategies are how I started to trade long time ago. When I started to trade when I didn't before learning price action or naked trading, this is how I began to trade, and I was making profit doing it. I was making profit doing it. I just with EMA combined with ADA, I just delivered to you a cheat, a strategy that even if that's all you know and you stick with it, I promise you consistent profit. I did not say you make profit all the times. I promise you make profit most of the time. Most of the time. So, but what we want to go through today is trend line, trend line. Somebody say trend line. Trend line, very important. And trend line is very, very important. Trading with trend lines. Trend line is very, very important. It's very, very important. Trend line is very, very important. And you see, trading with trend lines, there is the benefit of trading with trend line. Benefit of trading with trend lines. Okay, the trend lines. And see, trend line is very simple. It's very simple. Okay, trend line is very simple to use. Okay, why should you study trend line trading system? It's a system, it's a trading system. Number one, it is simple to use. Very simple to use. Number two, it provides high probability and high accurate setups. It gives you high probability and high accurate setups. See, when you learn trend line, boy, you have learned a powerful skill in trading financial markets. So very accurate skill, very accurate skill. And so number two, it is price driven only. Price driven only. It is a system that exposes you to the price to price action. It's just price driven. It has no need of any other. You are only dealing with time. You are not using any EMA, DS. It's just price driven, and then it works on all time frames. It works on all time frames. You can use it in 1 minute, 5 minutes, 15 minutes, 30 minutes, 1 hour, 4 hours, daily time frame, and so on and so forth. It works on all currency pairs and indices. It works on all currency pairs and indices. Trendline works on all currency pairs. Now, trading with trend lines. Common mistake in drawing trend line. Trend line is what you draw on your chart. Okay, you use your candlesticks, you draw it. Okay, and there's a tool. Trend line has a tool. That's a tool on your screen. If you are using your phone, that's a screw. That's the tool is there. Don't worry. Maybe I will show you after this class. I quickly do something on the phone on. MetaTrader on the phone and then show it to you. That's a tool that you draw. Then when you are drawing trend lines, you must not draw it through obstruction. People make that mistakes. I've seen people drawing trend lines, they are just chasing the price instead of waiting for the price to come and meet them. Drawing trend line through obstruction, it is not allowed. You are not permitted to draw trend line through obstructions. Number two, or in brackets, there must not be obstruction between point 1 and point 2, especially point 1 and point 2. There must not be obstruction. Your trend line should not cut across the candlesticks, should not cut across the wick. There must nothing be in between point 1 and point 2. Number two, draw trend line through candlestick wicks. Draw trend line through candlestick wicks. You're not supposed to draw trend line through. Do not draw trend line. Do not draw trend line through the candlestick wicks. It should touch the candlestick. It should touch it. It should not go through it. It should touch it at the edge. Okay. And then next point, drawing trend line that are not touching the peaks and trough. You see, there must be a pinpoint connect of the two peaks or troughs. Pinpoint connect of two peaks and troughs. Number 4, keeping already breached trend line and not drawing a new one. Okay, so when you are drawing trend line, the moment is already breached and price is far away from it. Note the word far away from it. Okay, when a new trend line is significantly breached, delete it and draw a new one. If you do not draw a new one, market will leave you behind. So when you draw a trend line, a market already breached it or passed through, whether broke it or respect for a long time, you delete it, you draw a new one, you draw a new one. So keeping already breach trend line is not advisable, it's not a good attitude. Okay, especially when price has gone far away from price has gone far away from when it has been, especially when it has been breached. Okay, next point. How do you now draw trend lines? Step 1, identify obvious peaks and troughs. Note the word obvious peaks and troughs. See, trend line is one of the most powerful trading tools or skill set in a market. And I know a lot of forex traders, a lot of profitable professional forex traders who only use trend line as their edge in the market. Trend line bounce or trend line breakout. There are two types of trend line. The bounce, trend line bounce, which is the one we're explaining today. The next class we're going to be talking about trend line breakout. Powerful setup. Listen, personally, I've made a lot and a lot of money just by using trend line, especially when I combine in support and resistance. My goodness, you will love it. My goodness. Connect a minimum of two. So identify obvious peaks and troughs. See, when you see wherever the market turns, okay, if the market is making higher high and higher low, where the market turns to make an impulsive movement, okay, that turning is an obvious trough. Obvious trough. Yeah, now, the moment you see two obvious troughs, two troughs that are very obvious, very glaring, just connect your lines, okay? Identify them first. Number 2, connect a minimum of two obvious peaks with a line from left to right. This is a downward trend line, or when you connect two minimum obvious troughs with a line from left to right, is an upward trend line. Upward trend line. When it goes from when it's obvious troughs, it's an upward trend line. When it's obvious peaks, it's a downward trend line. Okay. Next, and look at this example now. This is a trough. This is a trough. You just connect the two lines like this, then wait for it in the future and see if price is going to come here and respect the touch and respect the touch. So the interest is the third touch. So what you do is, first of all, you connect two obvious peaks or two obvious troughs and wait in the future if the price is going to react at a touch of the trend line. You watch if the price is going to react at the third touch. At the third touch, the third touch is always where you're looking for an entry. The third touch is your area of interest. AOI, area of interest. The dawn zones. The dawn zones is your area of interest. The third touch is your area of interest. Look at this, for example. Look at this beautiful example. This is exactly what I'm talking about. You draw your trend line. The moment you see this and you see this, and price is going down, you have already drawn your trend line and you are watching it in the future. Now, look at this very powerfully. Price came into the future and respected the trend line. Can you see? And at this point now, especially at the formation of this bearish engulfing candle, you take your entry straight, pump, and then see price sold massively. Price sold massively. It touched it again the fourth time, okay? The fourth time, price also respected it, and then it went down a little bit before it now reverses and broke that trend line. Very powerful strategy. It's as simple as that. It's as simple as that. As simple as that. So let me see if you can dive into the chart and see how you can actually use it, so that the class will not be too long. It's very simple, it's very powerful, it's very profitable. Very simple, very powerful, very profitable. Okay, so let me MetaTrader with you, and let's see if we can have a real live chart example. Okay, beautiful, beautiful. I love this. Oh my goodness. Are you seeing my chart now? Are you seeing my chart now? Can you see my screen now? You should be able to see my screen now. All right, beautiful. Did you see the chart now? I saw this peak, then I saw another peak here. So what do? I join my two lines, then wait for it in the future. I'm waiting for it in the future. At the third touch in the future, price actually respected the third touch of the trend line, and then the price is pushed to the downward side. Very powerful, very powerful, very powerful. See, so my interest is every time I see the two obvious peaks or two obvious troughs, I join my lines, and I'll be waiting if in the future it will be respected. If in the future, if price is going to respect my trend line. Okay, so that's trend line bounce. Very, very important. Very, 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 very important. So let me let me look at another example here. Look at this. Look at this now. Here is my point one. Here is my point one. Then here is my point two. Here is my point two. Okay, here is my point two. Then here is where in the future I'll be looking if price, the moment this is formed, I've already drawn my trend line. And look at what happened in the future. This is one of the kind I'll be teaching you in the future, in the next few classes. You see, we call it reversal candlesticks. When you see those candlesticks at this area of interest, this is my area of interest. I've already drawn it before all these candles get formed. I've already drawn it, and I'll be waiting in the future to see if price at the third touch of the trend line, if it be respecting it. Look at this candle now. It's called doji candle. It's a doji candle. Is or doji, yeah, doji or spinning top candle. It is a reversal candlesticks pattern that when you see it as your area of interest, is a signal that look, price is about to reverse, the pullback is about to end, the beginning, an impulsive movement is about to begin. It's about to begin. So what do? I pay my attention here at the third touch of the trend line, and then the moment I see those signal, boy, I enter my trade, and then look at it now. Look at the massive, massive pips. Massive pips. Look at it now. This is 196 pips. 196 pips. So trend line is powerful, bro. Trend line is one instrument, is one what do I call it now? Is one tool or skill set training that give you strong edge in the market. Strong edge in the market. Strong edge in the market. And look at this too. Look at this now. I just did this now. I'm just drawing this now. Look at this. Look at how powerful this is now. Look at that powerful. Look at my point one. Okay. Look at my point one, and then my point two, my point two, and then look at the third touch of the trend line. Look at the third touch of the trend line. The third of the trend line is here. Market came to touch it, and then market sold, and it sold massively well to the downside. That is the power of trend line. And this is called trend line bounce. When price bounce in and follow the direction of the market. This market is actually selling. This market is selling. This market is selling, massively selling. And when market is selling like this, you're expecting a sell actually. So the price get to the trend line and bounce. So that's why I call it trend line bounce. Trend line bounce. We're going to be talking of another strategy to trade trend line again, which is the opposite of trend line bounce, which is trend line breakout. We're going to be teaching that later. But today now, our study is based on trend line bounce. So when you draw your trend line, when you see obvious peaks, these are peaks, peak one, peak two, then you look at the third touch, and then we also have the trough. The lower part got a trough one, trough two, and then watching for it, the third touch, the third touch, the fourth touch, the fifth touch, because you can have we can have multiple touches as long as price is bouncing at that particular price is bouncing at that particular trend line. It can bounce for as long as it wants. And the moment as it's bouncing, you are entering your trade. As it's bouncing, you are entering your trade. That is a strategy we call trading with trend line. Trading with trend line. And trend line is what it's worth learning. Honestly, it's worth learning. So that's just a simple thing we are looking at tonight. And okay. You also see trend line here. You also see point one, point two, point three. The moment you see rejection like this and you see price already going up, you quickly draw your trend line and watch if at the third touch, if 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 price will respect it the third time. If price will respect it the third time. So you can do this on any time frame, but see the higher the time frame, the more reliable the trend line can be. They are the trend like the one I'm on my screen now is actually, I think this is 4 hour time frame. I love it when you do it on 1 hour. 1 hour, I do it very well on 15 minutes too. I do it very well on 15 minutes. I do it I do it on 1 hour. I do it on 15 minutes. I do it very well on 4 hours. Okay, very powerful. And there's no time frame you cannot use, just depending on the strategy that you've already mastered. So if I have my point one, point two, at the third touch here, you can see how price respected the trend line and bounce to the upside. So that is how to use trend line. And then so I wanted to choose one instrument, and show me draw draw 10 trend lines or draw trend line in 10 places. And then so what do you do? Okay, let me give you an example. So let me give you what to do. So if you draw a trend line like this, okay, now at the third touch now, you put green line as your entry. Green line as your entry. Your entry will be 1 or 2 pips above the candle that touched that trend line. 1 or 2 pips, just few pips above. If it's an up, if it's a bullish market, 1 or 2 pips above that trend line, above the candle that touched the trend line, then your stop loss will be below the last swing, below the last swing. So your stop loss is going to be red color, your entry is going to be green color. Then of course your take profit should be within the next swing, should be somewhere around here. Okay, your take profit should be also give it a green color. Your take profit is green color, your entry is green, your take profit is green, and then your okay, let me make your take profit to be blue. Take profit is blue, take profit is blue, take profit is blue, okay, and then your stop loss is red, your entry price is green. So we have green as entry, red as stop loss, blue as take profit. So you just look to your left, look at the next obvious swing again, put a take profit, and then look at this trade. Now this trade is about how many pips now? If you enter from here, you take profit from here, this is 79 pips. This is 79 pips. So that's the example I'm giving to you now. You give me this kind of example on my screen, you give me in 10 places. You give me in 10 places, 10 places where this happens, 10 places. Okay. And if I delete that, let's say for the downward trend now, for the downward market, okay, look at something around here too. So this candle that enter now, this candle normally I'm supposed to shift a lower time frame, okay, but I just do it like that. So your entry will be after that bounce. Okay, after that bounce, the candle that bounces back, you understand, or maybe somewhere around here. Normally it's supposed to be on a lower time frame. Let me see if I can check this on a lower time frame. Okay. So when you draw it on 1 hour, you are looking for your reversal candle to be formed on 15 minutes. If you draw it on 4 hours, look for the reversal candle to be formed on 1 hour. Okay. So you see something like this now. Now, so definitely my entry is going to be here. Okay, my entry will be here. which is supposed to be green color. My entry supposed to be green color. So my entry price after this candle closes now, after this candle closes, this bearish candle now, when it closes, and then I'm going to be having my stop loss just above that swing. My stop loss will be here, and then my stop loss is going to be red color, and then my take profit will be also green. Okay, so if it's green, I can just duplicate. So it will be within this previous. Just look left. What is the next obvious swing? My take profit will be around here. So sorry, my entry is here. My take profit is here. So now look at something. No, look at something. I'm risking 19 pips to gain 49 pips. I'm risking 19 pips. My stop loss is 19 pips. My take profit is, okay, sorry, is 50 pips. 19 to 50. 19 to 50. So let's do the calculation. 19 to 50. That's 50 divided by 19. 50 divided by 19. That is 1 to 2, 1 to 2.6 risk to reward ratio. 1 to 2.63, 2.63, we call it R, risk to reward ratio. For I just taught something now, something I plan to teach in the future. This is risk to reward ratio now. That means if I risk 15, if I risk 19 pips, I'm targeting 50 pips. That is 1 to 2.63 risk to reward ratio, or some people just call it this way. They just call it like 2.63 R risk to reward ratio. Risk to reward ratio. So 2.63 risk to reward ratio. You see now? That means this is a very profitable, this is a very good signal. This is a very good signal. I'm risking 19 to take 50. Risk good, very good risk to reward ratio. And that's how you determine which signal to take, because if this next swing, if your take profit it does not worth it, if you are risking more than you are making, it's not a good trade. But when you enter this trade, it's called if I risk 19 pips, I'm targeting 50 pips. That's a good trade. And then it's worth taking. It's worth taking. That's how to determine that. That is how a professional trader trades. That's how he thinks. He doesn't just think, oh, I have an entry, I have an entry. He's looking like, how much am I risking to get, how much am I targeting? Okay, so that is how to use trendline bounce. Okay, and I believe you must have understood that. I would like to end this class now. And if you have questions to ask, please feel free to ask it in the WhatsApp group, or drop it on the comment section. I think it's better on WhatsApp group. Let's continue in our class, and I'll see you again in the next class. Thank you.